Hello, bankers. A very good evening to all of you. Welcome back. So, welcome to JAIIB Prep. I hope I'm clearly audible and visible to all of you. So, quickly join in. And in this particular session, we are going to continue our discussion with Module B, right? So, Module B, where we have already done with the first 4 units. These are risk and basic risk management framework, risk in banking business, risk regulation in banking industry, and market risk. So today we will be starting with credit risk, operational risk, liquidity risk management, and Basel III frameworks, right? This Saturday and Sunday we'll be having marathons session for module A and module B as well. Module A especially. So we will be practicing case studies and application based question, so that will be our priority. So I'll make those particular events up also, so you guys can also schedule, right? So this Saturday is Eid, so we can utilize that particular time as well. All right guys, mostly it will be around 7 p.m. So we have done with the very first part. Now we will be starting our today's discussion with आपका credit risk. First of all, a very good evening to all of you guys. Yes, we have Rukmani ma'am, Himanshi ma'am. I hope you guys are able to download the PDFs also. Okay. There are few candidates, those who are facing some sort of issues related to PDFs and all. Okay. So what you have to do, this issue came with so many candidates, not so many, few candidates, those who recently installed the application. So what you have to do, just log out once, and if you re-log in, you'll find the problem will get solved. Okay, first thing. And still, if you face any issues, just ping me on app itself. I'll share those particular one. All right, guys. One set of PDFs are already there for the last year and everything. Now I'm adding these new things, and will we keep adding these particular one. Tarun sir, we have GD, Namaskar sir, Namaste sir, Elori sir, a very good evening. Okay. A very good evening to all of you guys. So shall we start? Shall we start our today's discussion? This Saturday and Sunday we'll be having long session, long marathon session, downside 3 hours, and that is a practice and a complete new set of questions. So I'm assuming ki you guys, along with these particular session, you also following that module wise one two set of questions are already there. Okay, at least go for the recent one. If you find any difficulty, just ping me on Telegram. I'll share the playlist also. Okay. So because from Monday onwards, from Saturday onwards, you guys are going to experience one complete new set of questions. I'm preparing those particular one on regular basis and full of case studies and application based question only. These are not the straightforward question. We have already done so many things around the straightforward things. Now we'll enter to the exam zone, and exact exam level question we will be practicing from the Saturday itself. Okay? So I request to all of you guys, please do attempt those particular, do watch the remaining things and all. And the first mock test, we have done with one mock test also. Okay? And I have shared the detailed explanation of that mock test also. I have uploaded on the app itself, so you can download, you can see, or like if you want to go through those particular one. At the end of that particular one, you will see the explanation part also. Okay? Dileshwar sir, Tina ma'am, very good evening. Chalo. So guys, now we will if you are facing any difficulty, please feel free to reach me out on you can send me message on Telegram, or else in app itself. Okay? Chalo. So now credit risk, we are going to start with this particular one. Yesterday only we generally talk around these particular one. Okay? So when it comes to the credit risk, it is also known as obligor risk, where basically we are like, these are like NPAs or any default made by the borrowers, so they are generally related to that particular one. Okay? So it is defined as potential of bank borrowers or counterparty fail to meet its obligation in accordance with the agreed terms. Okay? Mostly we have so many important aspect in this particular one, especially the type of risk, alarm, आपका alarm, which we have already discussed with ABM also. Okay? And the different type of credit risk and all, they generally comes under this particular one, right? So when it comes to the credit risk, we have this further bifurcation. One is portfolio risk, another one is transaction risk, as an institute or as a bank, we have to manage like both type of risks simultaneously. Let's say if we are entering into a transaction, we are giving loan to some new customers, so we have to manage the overall risk as well as the portfolio level. Okay, so what will be the risk probability with that adding that new customer in our portfolio? So we have to account that particular one, and for each and everything we have exposure limits and all. In case of portfolio, we have concentration risk and systemic risk. When it comes to the concentration risk, it is something like this. Let's say our portfolio or our asset creation is something like this. Let's assume this is IT industry. We have given bank A, they have given maximum loan to IT industry. Now, if something happened bad with this particular industry, our bank is going to face a huge losses. So that is the concentration risk. And to deal with these kind of areas or risk, we generally go for the आपका diversifications. ठीक है, so diversification in our assets, that is generally through that particular one we can manage this particular area. Systematic, then we have systematic risk. Systematic risk is something which is non-controllable in nature. I hope you know the basic bifurcation of risk: systematic and unsystematic. Unsystematic, which is controllable in nature and which is related to individual, or which is with the like with bank allocation or with the suitable policies and all, we can control. But आपका systematic is basically non-diversifiable. It is basically also known as inherent risk आपका after what we can say sometime the broader issues like global financial crisis, COVID-19, or the Great Depression eras and all. So where we do not have any influences, there is a bigger problem in the economy or in the world economy due to those particular one. Transaction basis, we have default risk, obligor risk, insolvency by the, or like where the borrowers won't be able to meet their requirements, and downgrade risk. When it comes to the downgrade risk, it is something, it happened with so many portfolios. Let's say we have given loan to XYZ company. We have given loan to XYZ company. Let's say 50 crore rupees for 10 years. This loan is, the tenure is 10 years. So at the time when we sanction this loan, the credit worthiness or the overall credit score of this ratings of this particular company was very good. But after 2 years, what happened? After 2 years, there is like, let's say there is a business risk or there is a financial risk in which this company XYZ deal. So there is some let's say there are some economy wise problem, or their product become outdated and all, and due to there is some weakness in the health of or financial health of this XYZ limited, right? So after 2 years, that means after 2 years, let's say earlier the score was triple A, now it came down after 2 years आपका triple B plus. So now that means the risk, the default probability is getting increased. So these type of risks are also known as downgraded risk, which we generally monitor through the LRM mechanism. So loan review mechanism, through that only we generally maintain these particular one. Rajiv sir is very good evening sir. Whether I'll get, I have already uploaded all these PDFs on the app itself. So you can check with that particular one. If you are still facing some issues, sir, no worries. Module A and A I have already shared in the Telegram group itself. But see what problem we face in Telegram now. Let's say you are watching this session for the very first time. Then I'll upload that PDF. After 2 days, someone else will join. Then they'll ask for the same things. But application you will get, apart from that mock test and other things, the old PDFs are also there. They are again, the content is static, so they are also going to help you out. Rajiv sir, for your concern, I hope this is clear to all of you guys, because this is going to help you in your coming areas. Now, credit risk management. So when it comes to the credit risk management, again, whenever it comes to the risk management, we do have this particular procedure: identification, what type of credit risk we are going to face in near future. So this is the very one. Then measurement. Measurement is something quantifying the losses. Let's say we are going to these are some portfolios, or these are some assets where we see some sort of weaknesses, or they are financial health is coming down. That means these are the areas, uncertainties where we can make some sort of losses. If actually that contingency occur or that uncertainty become reality, so how much losses we are going to face due to default by these borrowers. So that is your measurement, quantifying the losses. Mitigation is, sorry, monitoring and control. We do have like alarm system or the credit audits, or else we have so many like we have internal approach आपका, ठीक है, to deal with these kind of risk and all, ठीक है. So with that we generally do this particular things, ठीक है. Then mitigation is the final one, when actually that particular uncertainty happen and we execute our mitigation plan or that securitization in everything that generally comes under this particular one, ठीक है. So this is the entire one. So these are the same 4 stages which are also part of your credit risk management. When it comes to the organization, again we have the same things. I hope you guys now can relate these particular one. Board of Directors, Risk Management Committee, Credit Risk Management Committee, Credit Risk Management Department. So this is the overall organizational structure for the credit risk management. If you guys having any doubt around this particular one, please do let me know in the comment section so I can help you out with those particular one. Okay? So we have discussed all these particular one in detail. That's why when we discuss that entire introduction wala part na, so we have discussed these particular one in detail. So now if you'll have a basic or quick reading around these particular one, you will easily able to relate these particular things for your upcoming things. Okay? So risk management committee responsibility during the credit risk management. Okay? So setting guidelines for the credit risk management. In case of market risk, it was आपका setting guidelines for market risk. In case of the coming one is operational risk, it will be operational risk management and reporting आपका. Ensuring credit risk management process, confirm the policy, setting up prudential limits and periodical reviews, ensuring measurement of risk model, ensuring proper manning for the process management. Same things you'll get repeated आपका, right? Then we have credit risk management committee, or it is also known as credit policy committee or credit risk management committee. So they, like, I hope you guys remember that structure. So risk management committee, they generally weightify the overall risk. Like we have this is suppose that credit risk, credit weight of credit risk. Let's say this is market risk, this is operational risk, and this is liquidity risk. Okay? So now under risk management committee, we have credit risk management committee. So, and under which we have some subgroups and departments, right? So actually this team is working around the credit risk management things and all. And where we have one profile that is known as chief risk officer, right? So that is mandated, which was mandated by the RBI itself. So credit risk management department, which independent of the credit administration department, enforce and monitors compliances of the risk parameter and prudential limit set by the credit policy committee or upper credit risk management committee. So when it comes to the credit risk management department now, there is one team, they are also part of that particular team. Okay? That team is generally known as, I just missed that name, it will come for sure. So when it comes to the credit risk, type of credit risk, we have a default risk basically. So default risk when potential failure of borrowers to make promised payments either partly or wholly. That means when our asset become non-performing. Credit spread risk आपका, when it comes to the credit spread risk आपका, borrower does not default, there is still risk due to worsening in the credit ratings आपका, that downgrade risk. I hope you remember that one. Okay? So this is आपका credit spread risk is आपका where the as I gave you an example of XYZ Limited, so their credit rating is declining from AAA to BBB plus. So now the loss probability, the default probability is getting increased. So there is a chance of default, right? So though we are getting the regular payments on time, but still we have 8 years of time span which is remaining. So there is a probability of default. Okay? So there is still risk due to worsening in credit quality. This result in the possible widening of the credit spread. Usually this is reflected through the rating downgrade and normally firm specific and all. Correct? चलो, so we have two type of systematic or intrinsic risk and concentration risk आपका, ठीक है, concentration risk. Everyone know around these two आपका, ये clear है सबको, ठीक है. So when it comes to systematic risk, non-controllable in nature, they have a broader impact, ठीक है. So unsystematic, systematic, unsystematic, controllable in nature, diversifiable in nature. When it comes to systematic, these are basically आपका नॉन डाइवर्सिफाइबल इन नेचर, ठीक है, दे हैव अ ब्रॉडर इम्पैक्ट एंड समटाइम दे आल्सो कॉल्ड आपका इंट्रिंसिक रिस्क. इंट्रिंसिक रिस्क इज समथिंग, लेट्स से we have some assets or we have some portfolios. In those portfolio we have done the mitigation also. After mitigation as well, there is a probability of default. Let's say we have given loan to that XYZ company, 50 crore rupees, and we securitize that particular one with 70% or 80%. So 20% or the 30% is still in risk आपका, ठीक है. Let's say we have entered into some other agreements आपका, ठीक है. After that also there is something which we won't be able to diversify that particular risk, ठीक है. So after using every tool to mitigate that particular risk, there is some inherent risk which we can't diversify. So that is something related to intrinsic risk आपका, ठीक है. That is like they are kind of that amount is kind of impossible to diversify through any product. So that is generally comes under this. Concentration risk आपका, where when we create assets on a same portfolio and all, or same sectors and all, that generally comes under this particular one, correct? So systematic or intrinsic risk, portfolio risk can be reduced through diversification. If portfolio is fully diversified across geography, industry, borrowers, market, equitably, then the portfolio risk is reduced to a minimum level. That minimum level is generally known as your intrinsic risk. Okay? The minimum level corresponding to the risk in the economy which it is operating, this is generally known as systematic and or it is also called your intrinsic risk. ठीक है, संतोष सर, very good evening to all of you guys. Concentration risk आपका, the portfolio is not diversified, that is to say like say that it is high weight in respect of borrowers or geography or industry. As I gave you an example of IT industry, our bank put maximum asset from the IT industry. If something happened bad to the IT industry, we are going to make a huge loss. So that generally comes under this one. So these two risks are again important one. Now credit ratings, okay? This we have discussed earlier also, so we'll not we'll quickly go through these particular one. Okay? So credit rating deficit, the credit quality of the borrowers, and deficit his default. A credit rating process normally would consist of following parameters, like we have financial parameters, we have management parameters, industry parameters, or business parameters. Okay, let's say that XYZ company. So if any credit rating agency who is going to rate this particular institution, they'll rate that particular institution in by the different dimensions. Like it is aapka, first we will check the financial parameters based on their balance sheet and profit and loss account and all. Management parameters, their board of directors and all. Industry wise, in which industry this company belongs and how that industry is doing and what is the potential of that particular industry. And business parameters. Business is similar to that one. It is something aapka, how they are generating, what is the market shares and the customer base and all, that we are analyzing through this particular. So whenever a credit rating, when they provide their ratings to the industries or companies, they generally do on the basis of these broader parameters and all, right? Credit risk control and monitoring. So this is, we have MIS system, we have LRM, and we have some other tool also. So to an elaborate and well communicated policy at transaction level that articulate guidelines for risk taking procedures, guidelines and effective monitoring system is necessary. So we have, it must have been mentioned here that the appropriate risk information system is the basic prerequisite for the effective control and monitoring. A comprehensive and detailed MIS system and CIS credit information system is backbone for the effective CRM system or credit risk management system. So here we have so many things like we have credit appraisal process that we have discussed in your ABM module B. It's C itself आपका in detail. Hope you guys remember this one. ठीक है. So this is the very first one. Second one is risk analysis process. ठीक है. Basically credit appraisal process. I hope you guys remember that particular one. See, here we have so many areas आपका like for the term loans or for the आपका industrial project appraisals and all, where we have 8 different dimension. In the last one was the commercial appraisal and all, so that really comes under this one. Okay? Basically we are checking the solvency of that particular project. It is going to generate how it is going to generate cash flows for the business and all. So if they'll how long it will take to generate that cash flows and all, so how they can make the payments toward the EMIs and all. Okay? And risk analysis process आपका credit audits and loan review mechanism and monitoring process. Okay? These are the major ways which are generally part of this particular one. Okay? So policies, credit taking policy and guidelines at transaction levels be clearly articulated in the bank loan policy documents approved by the board. Standards and guidelines should be in order to आपका delegation of powers. ठीक है, ऐसे होता है ना, like branch manager they have a different powers, and a person associate or a regional head they have a different power. ठीक है, power credit appraisals आपका, ठीक है, power toward the credit appraisals, standard rating and benchmarks, pricing strategy and loan review mechanism. So that generally comes under this particular one. ठीक? Credit approving authority. This is very important when that department I was talking about, that particular terms na, credit risk management department. So they are generally part of this particular team also. Okay? Let's say we have a approval grid. That approval grid consists 3 to 4% and at least 1% from credit risk management department. See, because sometimes like we do have some loan targets and all. Okay? Sometimes we can become biased because we do have some sort of targets and all. But that person who belongs to the आपका credit risk management department, they do not have any target, right? So like we need agreements from all the members which are generally part of that particular approval grids, so which is generally known for this one. Okay? So basically this is a team who is going to sanction the overall आपका loans and all, and they are going to approve those whatever assets we are creating for the bank itself. Okay? Very important one. So each bank should have carefully formulated scheme of delegations of powers. Scheme of delegation of power. The bank should also evolve multi-layer credit approving system where loan proposals are approved by approval grids. Approval grid, or which is also known as approval committee. The grid or committee comprising 3 to 4 officers may approve the credit facility above the specified limit, and invariably one officer should represent the credit risk management department who has no volume or profit targets for their branch. This is the major reason why we are keeping this person in part of this approval grid, because he won't do any sort of biased decision and all. और ना ही होने देंगे आपका. That's why we are keeping that person. LRM also, I hope everybody know about this one. Loan review mechanism, and it is mandatory above 5 crore rupees. And other also we do 5 to 10% credits आपका, or the assets we simultaneously check, or we randomly check आपका around 5 to 10%, and we do analysis of the existing assets and all, right? So LRM, which is also known as credit audit, LRM is an effective tool for consistently evaluating the quality of loan book and bring about qualitative improvements in the credit administration. LRM is used for large value accounts with responsibilities assigned in various areas such as evaluating effectiveness of loan administration, maintaining the integrity of credit guidelines process, and assessing portfolio quality, etc. So these are generally part of this particular one. So basically it is a credit audits which generally help banks, like if we are finding some sort of weaknesses in the our loan portfolios, so we can have some sort of early remedial action. So we can prevent our banks, or we can protect our banks from like basically falling into any sort of trap and all, ठीक है. So ये सारी चीजें जिनके लिए काम करेगा. Promptly identify, very important one guys. Promptly identify which develop credit weaknesses and initiate timely corrective action. Evaluate portfolio quality and isolate potential problems. To provide information for determining adequacy of loan losses. To assess the adequacy of adherence to and loan policies and procedures. And to monitor compliance with the relevant laws and regulations. To provide top management with information on credit administration, including your credit sanction process, risk evaluation, and post-sanction follow-up. So they generally comes under this particular one, right? Credit derivatives आपका, these are the another very emerging tools आपका, ठीक है. In India we are just using these one, but worldwide we have more than 4 billion US dollar market, ठीक है, for the credit derivatives. So credit derivative basically, without transferring the ownership of the asset, we are transferring the risk, ठीक है. Like let's say, I hope you guys know around the credit default swap or the other different areas and all na. So what these instruments, they are helping us to basically, these are kind of a insurance to our existing loan, okay? If we are sharing some sort of interest with the third party, which is protection seller in this particular case, and they are making some sort of commitment, if this borrower get default, so we will pay the remaining outstanding balance आपका, ठीक है. So that is credit default swap and credit derivatives, and they becoming day by day very famous, because let's say if we are earning from a loan 10 crore rupees interest during that 10-year tenures, if we are sharing 2 crore rupees or 3 crore rupees with some insurance company, still will have a strong portfolio size and all, right? So that is generally part of this particular one. All right, chalo. So for most bank, particularly Indian bank, the single largest source of earning and perhaps earning volatility is also accounted in the credit risk. The traditional means to protect this one was collaterals, आपका, securities and all. And a credit derivative is an over-the-counter bilateral contract between two or more counterparties that provide for transfer of risk in a credit asset or credit portfolio without necessarily transferring the underlying asset from book of originator. Okay? So basically, we are originator, we are protection buyer, and the other party who is making some sort of commitments, and we are paying, they are protection seller, and we are paying some sort of premium, that is आपका like if any contingency happened with that particular asset, so they are going to make us payment about credit derivatives and all. Okay? Now there are some areas, motive for protection buyer like us, banks, Indian banks or our banks. Okay? Let's say we have given loan to that XYZ company 50 crore rupees. So now we have purchased one, like we entered into a swap agreement with some ABC Financials regarding the credit default swap. Okay? So if the ABC Financial is making some sort of promises, okay, if this company will default, we will pay you the outstanding balance, and for that sake we are paying them premium. So we are the protection buyer and ABC Financial is the protection seller in that particular case. Now, what are the benefit of the your protection buyer or our bank? Transferring credit risk without transferring the credit asset, hedging against credit risk, relief in regulatory capital required for credit assets, which can be used for further business purposes also, right? So better portfolio management by reducing concentration in market or आपका diversifications and all. Okay? For the seller, they are earning the premium basically. Yield enhancement आपका, speculation, they are doing some sort of speculation. If they believe that this organization is never going to default, that means they'll earn the premium during the period of that particular loan. So that they are doing that kind of business. Arbitrage in case of credit derivative instruments are inefficiently priced आपका. Inefficiently priced means like it is something ki, let's say there is a probability of default, but the default is something after 9th years, the 1 year period, and the outstanding balance during 1 year will be suppose that 1 crore, and the premium we are getting as of now, that is suppose that 7 crore 8 crores. Still, if that company make default, we'll have a win situation for the protection seller. ठीक है? So that is something. Diversification of risk आपका, ठीक है? They can do this one. Credit derivative initially were used only for the hedging purpose or to minimize the risk. However, in the past few years, credit derivative are increasingly being used for the speculative purposes. Also, any other derivatives like interest rate, equity, and forex derivative. Like nowadays, these are getting traded as the other type of or other form of derivative also. Very, very important part, guys. So please do revise this and do remember this. Okay, this is definitely going to help you. So the users aapka basically the market makers for the credit derivatives. So users shall be classified by the market makers either as retail or non-retail. So retail आपका individual and all, and this is a list of non-retail person. ठीक है? For the purpose of offering credit derivative contract, so following users are classified as non-retail users. ठीक है? These all are the non-retail users. NBFC आपका insurance IRDA insurance companies registered under IRDA, pension companies under PFRDA, mutual fund under SEBI, alternative investment fund under SEBI, resident companies with minimum net worth of 500 crores and all, with their balance sheet. Foreign FPIs aapka registered with SEBI. So these are the non-retail companies, non-retail users. Apart from this, they are all are generally categorized as a retail users. So this is all about your unit number 15 आपका, the basic common concept which is a must require. ठीक है? तो ये इतना content जो मतलब if you are going for CAIIB examination June, so आपको इतना एटलीस्ट पता होना जरूरी था. ठीक है? चलो, now we will move to our next unit. And if you guys having any query, please do let me know in the comment section. Okay? Unit number 16, operational risk and integrated risk management. Okay? Today, one of my friend is getting married from bankers only. Okay? So in Bangalore, but I won't be able to achieve like go there. Okay? So tomorrow morning I'll go at 7 o'clock. Otherwise, he'll get angry on me. So he's a banker. He worked with this Grameen Bank आपका, ठीक है? Karnataka Grameen Banks, but he's posted somewhere else. But now he's calling me. So I'll go tomorrow for sure. So similarly, you guys also have to some sort of sacrifices. You also have to do some sort of sacrifices. So he is actually he is personally texting me right now. Chalo. So operational risk आपका, operational risk due to glitches, and BCBS definition is here. Then we have operational risk classification. This is again very important. Event based and cause based. Take a cause based and event based. Operational risk management practices, management overview and organizational structure. This is common. Process and framework common. Monitoring common. Operational risk qualification common. Operational risk mitigation common. Factor parameters required to implement advanced measurement approach. This part is very important. You can expect case studies and all around this particular one. Integrated risk management, again this is very important. Necessity of integrated risk management challenges, and integrated risk management approach, again very important. Okay? So there are some areas which are very, very important from this particular topic also. Okay? So when it comes to the your operational risk, so there is a definition which is given by BCBS. Operational risk, no, this is not the definition. See, it is, this is basic meaning. That definition should be part of this particular one. This is the definition. This is the definition which is given by BCBS for the risk of losses resulting from inadequate or failed internal processes, people, system, or from external events. So this definition is given by BCBS, Basel Committee aapka, about this one. So it is something like, let's say there is a server down. That is a operational risk. There is an employee strike. That is a aapka operational risk. Let's say there is some sort of events going on or like some sort of dispute around the branch area and all. Due to that particular one, we won't be able to open branch or any other things like technological failures and all. So they all generally comes under this. inadequate or failed internal processes, people, we all take systems or any external events. They generally categorize under this one. So lost data and others, they are generally part of this. Operational risk result from the possibility of suffering losses as a result of flaws or failures in the organization, internal procedures, employee decision, and the other areas also, right? So nature, the second consecutive paper of Basel II, basically Basel II, 2004, like operational risk was not part of your Basel 1 team. Basel 1 was more toward the credit risk, and the second 1996 amendment, with that we generally include the market risk. Okay? So in the second consecutive paper of Basel II, where we introduce the operational risk, okay? And this is generally categorized as cause and effect basis. So classification based on cause that are responsible for the operational risk, and classification based on effect of risk were suggested. Okay? Classification based on cause and effect like this. Okay? So cause based classification, it can be people oriented causes, okay, like negligence, incompetence and insufficient trainings and integrity, or key man and all. Okay. Process oriented आपका, ठीक है, transaction based causes, business volumes of fluctuations, organizational complexity, product complexity and major changes. Team process oriented operational control based, inadequate segregation of duties, lack of management supervision, inadequate procedures. Technology oriented causes, poor technology, telecom. Then we have obsolete applications, outdated applications, basically lack of automation, information system complexity, poor design, development and testing. External causes, natural disaster, operational failures of a third party, detroit social or political context. होता है ना कई बार से there are some riots in the city, so we won't be able to open the branch, or even due to those riots our branch face some sort of losses, or ATMs face some sort of losses. They generally comes under this particular one. ठीक है? So they all generally comes under these particular areas. हाँ हाँ बिल्कुल, कौन है? महेश सर, from this Saturday onwards we will be doing case studies. ठीक है? No worries. Saturday onwards. ठीक है? So just like I have already done one session around the concept part and all, but that was completely in mostly in Hindi and all. ठीक है? So there are so many peoples from South also. Those do not have any sort of understanding around that Hindi things and all. So that's why I'm quickly revising these particular things, so everyone can get benefited. Luckily, we have this in this term we got 2 weeks आपका. So from Saturday onwards, we'll be having regular marathons. First set will be based on case studies and application based or statement based question. We are not going to do any sort of direct question now, because I have already provided you 2 set आपका. You just have to consume that particular one. All right, Mahesh sir. From Saturday for sure you are going to have those particular sessions. So effect based आपका, it is legal liability, means आपका there is some regulatory penalties and all. Regulatory compliances in taxation, ठीक है. Legal liabilities, like let's say there is some flaws in the law, we are not fulfilling those, but let's say we entered into a contract with the customers and that makes some sort of default and all. Regulatory आपका penalties and all imposed by RBI or others. Loss or damage to assets due to any reasons. Loss of recourse, any recourse means any sort of collaterals and all. And write downs आपका, any NPS which got write down through this particular one. ठीक है? So this is now event based आपका, ठीक है? Event based classification which generally comes internal frauds. ठीक है? Internal frauds we have. Internal frauds means where we have at least involvement of one or few people from the inside of the bank. ठीक है? Internal fraud is something where we have one person who is involved in that particular fraud. External fraud is where we do not have any internal involvements, but there are some external parties, or the fraud which generally occur due to some third parties and all. Client procedures and business practices, damage to physical asset, business disruption and all. So these are the areas. I'll show you the complete list. So now please go for this one. Internal fraud आपका, internal fraud, losses due to act of type intended to defraud, misappropriate property or circumvent regulations, the law or a company policy excluding diversity discriminations events which involve at least one internal party. आपका that is internal fraud. ठीक है. Second one is आपका external fraud, loss due to same आपका due to by the third party. Employee practices in work place safety आपका. ठीक है. So let's say there is an employee who met with some sort of accident, so we have to compensate through the insurance. So that generally comes under this particular one. There is a customer who visited our branch and some ceiling fan or something happened to that particular person inside the branch, so we have to compensate. That is your aapka workplace safety and all. And even for these safety measures, we have to do something like fire related things or others. We have to keep some provisions. They also involve some cost. They generally comes under this. So losses arising from act inconsistent with employment's health safety laws or agreements, from payment of the personal injury, or from diversity discrimination events and all. Client, product and business practices, loss arising from unintentional or negligent failures to meet professional obligation to specific clients, and or from the nature or design of a product as well. Okay? Damage to a physical asset, so losses arising from the losses or damages to physical asset from natural disaster and all. Okay? Business disruption or system failures, loss arising from the disruption of business or a system failures, execution, delivery and others. If we have some sort of problems with this area, they generally comes under this one. Okay? Set Himanshi ma'am 7 p.m. Okay? I'll let you know in the group, but most probably I'll do it from 7 p.m. to 10 p.m. and it will be a marathon. Now from Saturday onwards, every session will be for 3 hours. Okay? Or else like actually Monday, Tuesday, Wednesday, I used to have, this time we won't have. Monday onwards, it will be at 10 p.m. Or 9:30 to 10 p.m. Okay? But Saturday and Sunday, Saturday I'm planning for 7 p.m. and Sunday we'll do Saturday we'll be doing 2 sessions. One is module D revision आपका this, and another one is आपका module A practice part आपका. ठीक है. हाँ, definitely that those session will be completely in bilingual and you guys will join live now. ठीक है. So especially those who are having some sort of problems with language, please do join line, and if you miss something now, you can instantly ask your queries and all. ठीक है. Yes, हाँ Raghu sir, बिल्कुल. ठीक है. So you won't face any issues with those particular. Don't worry, guys. Operational risk management organizational framework. Again, it is same. The framework is same in every case. Like we have board of directors, they're responsible for eventually they're responsible for all losses, or even if it is arise from the operational risk. Risk management committee, operational risk management committee, departments, operational risk managers, support group, and this thing. I hope now everybody able to remember this particular one. Okay? So this is the third or fourth time when we are going through the same process itself, right? So now this part is very, very important. BCBS, to manage the operational risk, there are 11 principles which are generally released by the BCBS. ठीक है. तो जो भी आपके आपके जो प्रॉब्लम्स हैं, मतलब हाउ वी शुड tackle the operational risk or how we should manage the operational risk at bank wide. So for that sake, BCBS, they have provided 11 principles. For liquidity risk, they have provided 13 principles. So these principles are very, very, very important. So now we will quickly go through these particular one. Okay, just a minute, huh? Please quickly go through this one. Yes. So we have 11 principles. These are in the name of we have fundamental principle of operational risk management. So principle one, it is something related to board of directors. They should take the lead in establishing strong risk management culture. The board of director and senior management should establish a corporate culture that is guided by strong risk management and that support and provide appropriate standards, incentives for the professional and responsible behaviors. Principle 2, banks should, these are by the BCBS, ठीक है, BCBS, Basel Committee आपका, ठीक है, Basel Committee on Banking Supervision. Banks should develop, implement, and maintain a framework that is fully integrated into bank overall risk management procedures. The framework for operational risk management chosen by individual bank will depend on range of factors, including nature, size, complexity, and risk profile as well. Third one is board of directors should establish, approve, and periodically review the framework. The board of directors should oversee senior management to ensure that policies, processes, and system are implemented effectively at decision level. ठीक है. Four one is आपका board of directors should approve and review the risk appetite and tolerance system. Tolerance statements for operational risk that articulate the nature, type, and level of operational risk that the bank is willing to assume. Fifth one is आपका senior management should develop for approval by the board of directors and effect clear, effective, and robust governance structure with well-defined, transparent, and a consistent line of responsibility. Sixth one is senior management should ensure identification and assessment of the operational risk inherent in all material products or activities, processes, and system to make sure the inherent risk and incentives are well understood. Senior management should ensure that there is an approval process for all new product activities, processes, and system. Eighth one is senior management should ensure should implement a process to regularly monitoring operational risk profile and material exposures to the loss. Material exposure means आपका money, in the term of money आपका how much we are losing from those particular activities. Appropriate reporting mechanism should be in place at the board, senior management, and business line level that support proactive management of the operational risk. Ninth one is banks should have a strong control environment that utilize policies, procedures, and system, appropriate internal control, and appropriate risk management, so risk mitigation or transfer strategies. 10th one is banks should have business resiliency and continuity plan in place to ensure an ability to operate on ongoing basis and limit losses in the event of serve business disruption. The final one is operational risk management practices should be based on a well laid out policy duly approved by the board levels that describe the processes involved in the controlling operation risk. Now, how you'll see the question based on these 11 statements? They'll give you one statement आपका कि which of the following statement is inaccurate about the BCBS guidelines or principles toward the operational risk management. If you, I'm not saying you go for principle wise rectification and all, never. You just have to go through these particular statements once आपका with the help of questions, आपका practice question. If you practice these particular one, so they are going to help you in your upcoming examination. No rectification is required. You just try to build your understanding around these 11 principles and all, and with that understanding you will be able to solve this one. ठीक है? चलो, so now next one आपका, who is here आपका? Shubham sir, what happened? Shubham Rana sir is asking for some feedback आपका, वो भी live session में, ठीक है? Just like I don't know why you come up with this particular question. All good ना? सब कुछ सही है? If you have some doubt, just connect me. I'll help you out. Chalo. So business resiliency and continuity, the policy should cover. Now this is something like, let's say this is something ki if there is some stressful situation happen in the past or like in the future, sorry. So we can like there should not be like we used to say na business is a going concern. अब ऐसा नहीं होना चाहिए कि like there is some situation happen and we stop doing activities and all. No, if you stop, that means you are going to make a huge losses and all. So we should have a plan B in our hand, so we can quickly identify the problems and we can deal with them, and simultaneously we are serving to our customers also. So that is something around this one. So operational risk management structure, for that one we'll be requiring operational risk management system. Role and responsibilities, operational risk management processes and risk assessment and measurement. Again, it comes to the same. When it comes to these particular areas, so that generally are related to this particular one. Now this is something your homework, guys. You can go through this particular one. You can go through this particular one. So these are the events. Internal frauds. So they generally categorize under the different areas. So this is something which you have once. Please go through these particular one once, because we have number of slide for this one. Second one, external frauds, which include these particular internal frauds. We have unauthorized activities or theft and fraud, two categories. Here itself we have theft and fraud plus आपका system security, like hacking damages and all, they generally comes under this one. Then we have employment practices and workplace safety that we have discussed. It is given in detail आपका what generally comes under these many areas, you know. Next one we have client product and business practices. So this also we have discussed, but now under that particular head there are so many things which generally comes under this particular area. Damage आपका that natural calamities in all, business disruption and system failures, which include these many areas. Okay, so these are the areas which you can go through आपका which you can go through these many areas and all. Okay, all right guys. Yes, chalo. Next one, integrated risk management. Okay, so now the next one is आपका integrate. Okay, please quickly go through this particular one. Yes, done. It is something आपका some sort of manipulations. Who was this? Tina ma'am, it is some sort of manipulations आपका. Sometimes there is some manipulation with the documents and all, na? So that is generally comes under this particular one. All right. Okay, chalo. So integrated risk management approach, which is also known as IRM. So this process we have strategy, organization, where we have we means आपका that profile of CRO, Chief Risk Officer, which was introduced by RBI. So that portion is very important. This should be part of this one. Yes, sir. So the process integrated risk management consists strategy, integration of risk management as a key corporate strategy. Integration of risk management is something, let's say we have different type of risk. We have operational risk, we have market risk, or we have liquidity or आपका credit risk. So these all are interlinked with each other. So we need some sort of integration. We need a system which can integrate all these type of risk and all, and that system can escalate when anything went wrong in that particular area as well, right? So establishment of organization, establishment of chief risk officer, CRO, it is mentioned here only, with his or her accountability of the accountability to the board of directors. As part of effective risk management, RBI has advised bank inter alia to have a system of separation of risk management, credit risk management function from the risk sanction process. However, RBI observed that the bank follow the diverse practices in this regard. In order to being uniformity in approach followed by banks, they generally introduced this particular one, that is आपका bank should appoint CRO, one independent profile which is known as Chief Risk Officer, right? Bank should lay down board approval policy clearly defining the role and responsibilities of this person in the organization. Okay? So, role and responsibilities of the CRO. CRO has to control and coordinate the function of risk management departments of the bank. Because of the importance of this particular profile, CRO is directly going to report MD and CEO of that particular bank. Okay? So this is very, very important, guys. This get asked so many times. So please do remember this. The process of identifying, assessing, controlling, and financing risk must common across the whole enterprise. Risk management system must be developed to provide information and analytical tools to support enterprise risk management functions as well. So they generally comes under this particular one. Okay? CRO has to be given overall risk related responsibility under the board of director. Position I'm 100% true, and as this profile is very important, or that position is very important, so that's why the reporting is directly to the MD and CEO as well. Okay? So when properly implemented, integrated risk management align the strategic aspect of the risk with day-to-day operational activities. Strategic aspect means the long-term aspect of the risk management with the day-to-day operation. Facilitate greater transparency for investors and regulators. Enhance revenue and earning growth. Control downside risk potentials. Implementation of integrated risk management has challenges. So they are its real-time concern, business challenges, and cultural issues. The process integrated risk management consists of strategy, integration of risk management as a key corporate strategy, organization, आपका chief risk officer position. Then we have process, the process of identifying, assessing, controlling, and financing risk. Then system आपका which like MIS and all, so they can escalate issues on timely basis, so we can work on those particular areas and all. So they generally comes under this one. Okay? CRO things is very, very important one. April 2017 when we introduced this particular one, and this profile get asked so many times, so please be careful around this one, guys. Right? So next one. Unit number 17. So unit number 17, liquidity risk management. So from here we have type of liquidity risk management. Potential आपका this potential liquidity risk drivers are very, very important one. Okay, so many they get asked so many times. Principles again आपका we have 13 principles for sound liquidity risk management. Okay. Governance of liquidity risk management, आपका management liquidity ratios aspect, one case study or numerical question. Stress testing again, contingency funding plan, which are generally outcome of these principles and all. Again. Then we have your liquidity across currencies, MIS, reporting to RBI. Okay, this reporting wala part is again very, very important one. Okay? So liquidity risk is something when we won't be able to convert our asset into cash, or when we won't be able to meet our liabilities on timely basis. Correct? So basically what we generally want, we can have these four situations, but every bank they generally dream around solvent and liquid. Okay? Solvency means आपका profitability, and liquidity is we have enough cash in our hand so we can pay off our obligations or our liabilities, right? So this is what we want, but sometimes the situation is like liquid but not solvent, still manageable, but solvent but not liquid, or neither. This is a kind of a dangerous situation or dead situation for the institution itself, right? So they generally comes under. Now this part is very, very important, guys. Very, very, very important. Okay? One question you guys can expect based on the multiple statements around this particular one. Okay? So potential liquidity risk drivers. So the internal and external factors in bank that may potentially lead to liquidity risk problems in the bank. Okay? So liquidity, like something, let's say we have internal issues also. Okay? Let's say we have taken deposit from the customer and we created asset for long term period. There is a huge gap, huge maturity gap, and we do, let's say we have planned with some other asset and those assets become non-performing, or there is some sort of delays in all. So these kind of issues, they generally provide some sort of problems also, right? So internal banking factors and external banking factors. So internal, basically, which are in the control of bank itself. Again, so what we have, high off balance sheet exposure. If a bank is creating or providing high off balance sheet exposure, that means they are entering into LCs or other guarantee related things and all. So that can be a cause or reason for this one. The bank rely heavily on short term corporate deposits or wholesale deposits. A negative gap liability is more than the assets in maturity dates or asset liabilities. The bank rapid expansion exceed the available funds on the liability sides. Concentration of deposit in short terms, that means if that concentration, there is some problem with the concentration of funding sources, so that can also create our problems. Less allocation in liquid government instruments, fewer implementation of funds in long-term deposit. Any statement with like these are the statements. If you are having any doubt with any statement, please do let me know in the comment section, so I'll try to explain that particular one. This is very, very, very important, guys. Okay? So the areas are basically high off balance sheet exposure. I hope this we have discussed yesterday only. Okay? Heavily rely on the short term corporate deposit or wholesale deposit. That means, like, why we use retail, why we give more importance to retail depositor, because we get diversifications with those particular deposit. Okay? Let's say we have some state deposit. Now if they state withdraw, so you are going to make, if you have major dependency on state deposits and all, so you are going to make a loss the day when they'll withdraw their account with your banks. So that kind of things. Okay? This ALM आपका asset or liability mismatch, or if the maturity gap is huge. Rapid concentration, again similar one. Rapid expansion was there. Again, that is something sorry. So let's say we are taking deposit and we are rapidly creating long term assets and all. Okay? So if something happened with the system, so that is going to make some sort of issues and all. So that is generally comes under this. So these are the internal factors. Now external factors, very sensitive financial market here. So where we do not have any control, right? External and internal economic shock, slow economic performance. We have decreasing depositors' trust on the banking sectors. Non-economic factors, sudden and massive liquidity withdrawals from the deposits. Then we have unplanned termination of government deposits and all. So these are some areas which are generally categorized under the external banking factors. So this part is very, very important, guys. So please do remember this one and try to revise this one, right? So key consideration to manage the liquidity risk, availability or basically your sources of funds आपका, ठीक है, extent of volatility of the deposits, how volatile they are, ठीक है, the frequency, deposit and withdrawals and all, degree of reliance on volatile sources, how much we have, level of diversification of funds, historical trend, quality of maturing assets, that your sources, basically whatever assets we have created, so their qualities and all. Market reputation, impact impact of off-balance sheet exposure on balance sheet and contingency plan. So these are some key consideration to manage the liquidity risk, or while you are planning risk mitigation for the liquidity risk also. Okay? So we have two major sources. One is funding, another one is market liquidity. So funding is something, it is around the concentration sources and all. Okay? So let's say the sources of funds, if your bank is like sources are concentrated on few areas, so that means you are in danger. So if they'll change your bank to someone else, so you are going to make a huge losses. Market liquidity is something where we won't be able to convert the assets into aapka cash. The risk that bank will not be able to meet effectively the expected and unexpected current and future cash flows and collateral need without affecting either its daily operation or financial conditions. Market is risk that bank cannot easily offset or eliminate position at a prevailing market rate or आपका that this we have discussed I guess in our previous session also, so that is the relatable, ठीक है. Now this portion again very important one, ठीक है. So liquidity risk management principles. So BCBS published principle for sound liquidity risk management supervision in September 2008, that means post global financial crisis, and these principles are more important than your operational risk principles, ठीक है. तो if you'll ask me the ratings आपका the importance between these two, आपका operational risk principle or this, I'll go with this one because they are very important one. So we have 13 principle here. So principle 1, bank responsible for sound management of liquidity risk, ठीक है. A bank should establish a robust liquidity risk management framework that ensure it maintains sufficient liquidity, including high quality liquid assets, to withstand a range of stress events and all. So that is the very first one. Second one, आपका principle 2, what they suggested, a bank should clearly articulate a liquidity risk tolerance that appropriate for its business strategy and its role in the financial system. Principle 3, senior management should develop strategy, policies and practices to manage quality risk in accordance with the risk tolerance, and to ensure that bank maintains sufficient liquidity. Senior management should continuously review information on the bank liquidity developments and report to the board of directors on a regular basis. A bank board of directors should review and approve the strategy, policy, practices related to the management of liquidity at least annually, or means once in a year, and ensure that senior management managing liquidity risk effectively. So these are the areas which are generally part of this one. Okay? Principle 4, a bank should incorporate liquidity cost, benefit and risk. Take a liquidity cost and liquidity cost, benefit and risk in internal pricing, performance and measurement, and a new product approvals process for all significant business activities on and off a balance sheet, thereby aligning the risk taking incentives of the individual line with the liquidity risk exposure their activities create for the bank as a whole. Okay? Business activity basis or आपका as a business whole. Principle 5, this get asked so many times. Okay? A bank should have a sound process for identifying, measuring and monitoring and controlling liquidity risk. This process should include a robust framework for comprehensively projecting cash flows arising from asset, liabilities and off-balance sheet items over an appropriate set of time horizon. 6, आपका bank should actively monitor and control liquidity risk exposure and funding need within and across legal entities, business line and currencies, taking into account legal, regulatory and operational limitations to the transferability of the liquidity. 7 is step, I just reading these particular one. If I'll found anything which is complex, I'll explain that one. Otherwise, these are the plain rules. A bank should establish a funding strategy that provide effective diversification in source and tenure of the funding. It should maintain an organization presence in its chosen funding markets and the strong relationship with the fund providers to promote effective diversification of funding sources. 8 आपका, ठीक है. So 8 you can go through because I want to discuss 11 one, ठीक है. So हाँ, 9th आपका, okay. A bank should actively manage intraday liquidity position and risk to meet payments and settlement obligations on a timely basis. Both आपका transaction level as well as portfolio level. Bank should actively manage its collateral positions, differentiating between encumbered and unencumbered assets. Okay? So when it comes to the encumbered and unencumbered asset, so these are basically like, let's say we have some government securities, and against those government securities, let's say we have some government bonds or sovereign bonds, and if we have taken any loan against those upper treasury bills or all, so they are generally encumbered. Unencumbered is basically we have 90 days treasury bills or 30 days or whatever the time duration, आपका 91 days treasury bills, ठीक है. So, and we haven't taken any loan or any others debt on that particular security. Okay? Or if, let's say we have some gold and that gold is we haven't put that particular gold in any sort of collaterals and all. So they are easily or ready to convert into cash. So that is unencumbered. Encumbered is basically we have some short-term security and we have taken some loan against that particular security. So this is the basic difference between these two. Basically for LCR आपका liquidity coverage ratio, we use unencumbered high quality liquid asset. That means those are the assets which are readily available to convert into cash. We have not taken any sort of debt, or they are not pledged with any other institutions and all. Principle 10, a bank should conduct stress testing on a regular basis for a variety of short-term and protected institution specific and market wise stress testing. Yes, stress testing is something, this is a model which generally help us to check the efficacy of the existing system कि जो अभी हमने risk management के लिए whatever system we have developed, so how effective they are. ठीक है? So in case we generally do some sort of testing with different scenarios, if this situation happen, how it is going to support our banks. Okay, so that is we do some sort of stress testing with the help of different models and all, right? Principle 11 is very important. Again, this get asked so many times. Formal contingency funding plan, CFP. It is your plan B basically for that risk, that clearly set out strategies for addressing liquidity shortfall in emergency situation. Let's say if some sort of stressful situation are there, so how we are going to deal with that particular one. So for that sake, we have one plan that is called CFP. That CFP should be tested on regular basis so we can make sure the efficacy of that particular plan. So our CFP should outline policies to manage a range of stress environments, establish clear line of responsibility in that situation, who will responsible or who will execute, include clear invocation, how you are going to basically run that plan or escalation procedures, and be regularly tested and updated to ensure operationally robust. This is very important, guys. 12 आपका a bank should maintain cuisine of unencumbered high quality liquid asset. Nowadays they are generally known as in the term of LCR, liquidity coverage ratio, to be held as insurance against a range of liquidity stress scenario, including those that involve the losses or impairment of unsecured and typically available secured funding sources. There should be no legal, regulatory or operational impediments to using these assets to obtain funding. Means unencumbered. Okay, this is the meaning, exact meaning of unencumbered, right? Principle 13 आपका, again this is very important around the disclosure. A bank should publicly disclose information on the regular basis that enable market participants to make an informed judgment about the soundness of its liquidity risk management framework and other liquidity position. So where we have 5 different type of reports आपका, those reports will go through just after this one. So these are the 13 principles which generally get released by the BCBS in September 2008, just after the global financial crisis. That Lehman Brothers banks or the global financial crisis was the majorly they was led by the liquidity problems and all, liquidity and credit risk combinations. So after that we come up with this kind of solutions, and BCBS they generally provided these particular areas. Okay. All right, chalo. So again, this is the part which we have discussed earlier also. Same thing, same. So now we'll pass on these one, organizational structure and all. So you can go through these one. ELCO आपका, here we have ELCO. So in that case, it was like credit risk management committee or आपका operational risk management committee. Here it is generally known as asset liability management committee. So liquidity risk management policy, we have liquidity risk tolerance, basically exposures, kind of exposures and all. We have the another one is strategy for managing liquidity. Again, identification or the entire journey. Measurement, we use stock approach and flow approach. These are two approaches. Stock approach and flow approach. Stock approach is basically your आपका ratio driven. So we have so many ratios, and RBI have provided the industry average also. So you have to maintain that industry average, or you have to maintain above than that particular one. So you can protect your bank from any sort of your liquidity risk. This is the ratio analysis. These are the 7 ratios which are generally part of this one, and they get asked so many times. Okay? So aapka, like, we have volatile liabilities, we have core deposit, we have it is आपका, it is generally known as loan to mandatory ऐसा, there is one term called for this one, I just missed this one, ठीक है. And similarly for this one, ठीक है. So these are the, we'll practice these particular one with the help of statement or ratios आपका, ठीक है. So please do remember these one, or you can, or else you can take a screenshot so you can revise anytime. So these are the ratios and their significance, and this is the industry average. Okay? So this is the, basically with this industry average, what we generally do, we create a benchmark and we have to keep ourselves above that particular one. Okay? So this is a kind of a ratio. Like, this list will be required while you solve the numericals and all, and you have to go through these particular one. So many times they generally ask these particular things in statement ways, or the ratios, or the uses of that particular ratio as well. Reporting to RBI. So we have these 5 type of reporting. For domestic currency, Indian operation, overnight basis, sorry, fortnight basis. Foreign currency, Indian operation, fortnight basis. आपका combined Indian operation, fortnight basis. Overseas operation आपका monthly basis. Consolidated bank operation your आपका quarterly basis. ठीक है. It should be mentioned here. हाँ. While statement 1 to 3 आपका 1 to 3 are required to submit fortnightly. Statement 5, 4 and 5 are to be submitted on monthly and quarterly basis. So this is the one. So reporting of requirements. So bank are required to submit liquidity returns as per the prescribed format of Chief General Manager in charge, Department of Banking Supervision, RBI, Mumbai. So statement of structural liquidity, and the basic requirement is this. These reports should be in 5 parts, and the reporting timing is something like this. Again, static portion, but very this portion get asked so many times. तो ये थोड़ा सा आपको ध्यान रखना पड़ेगा, ठीक है. The nature of, sorry, name of the liquidity returns आपका, and their time duration and time period by which required to be reported. So we have again these 5 statements. Yeah. Part 1, statement of structural liquidity, domestic currency, Indian operations. Yeah. Fortnight basis. Yeah. This is fortnight basis. Part 2, this is the format आपका. Part 2, which include foreign currency, Indian operations, fortnight basis. Yeah. Then we have combined Indian operation, fortnight basis. Part B, your liquidity structures, overseas operation, monthly basis. And part C, आपका statement of consolidated bank operation, quarterly basis. This information we have discussed with this also. So this is the same one. These are the same one. And this is the flow. Part 1, part A1, part A2, 3. These are the fortnight basis. This is monthly, and this is आपका quarterly basis. Now this is the basically periodicity. आपका periodicity. Now time periods by which required to reported RBI. Okay? So let's say for this fortnight, let's say first fortnight of your June months. So we have to submit within a week from the reporting date. Let's say 15th is the first end of the 14 is the first fortnight is getting in. So after 14, we have within 1 week we have to submit these 3 reports with RBI. Now in this case, this report gets submitted monthly. So next month, आपका, let's say for June months, आपका by 15 July you have to submit this one. And quarterly आपका a month आपका, let's say April, May, June. So this is the final month of the first quarter. So after that, within 1 month, we have to submit these particular one. Here it is clearly mentioned, reporting date will be 15th and last date of the month. In case date these date are holidays, the reporting day will be previous working day. Okay? Previous working day. Reporting date will be last working day of the months or quarter in that particular case. These two take आपका for this is for these are the for this one. 15th and 30th in case of these 15th and 30th, or the last first and 15th and last day. And for this one, आपका last working day, and if it is holiday, so a prior day, a previous day, whatever the date is given, right? So that is generally part of this one. Final unit, guys, unit number 18 आपका, I guess this is the final one. And here we have so many things get repeated. अब यहाँ पे if you see this one, we have LCR, liquidity coverage ratio, we have liquidity risk management tool, and NSFR, ठीक है, net stable funding ratio. So majorly these two tools and these things will get repeated, ठीक है. So Basel 3, the basic introduction. During Basel 3 itself, this we have discussed yesterday only. Okay. So during Basel 3, we have introduced the additional requirements and 2015 LCR and 2018 NSFR. Okay. These are the two new tools which generally provide additional strength to our existing bank and all. So capital requirements, this was, I hope you guys remember yesterday only, we discussed the entire chart and all. Okay. ठीक है. So overall 11.50% after your CCB and the core risk weight assets आपका, ठीक है. It get repeated in this one basically. And liquidity coverage ratio, this is something. So how we calculate LCR आपका, stock of high quality liquid asset divided by net cash outflows in 30 calendar days into 100. So it should be, your ratio should be greater than or equal to 100%. So that is the one. So in phase manner, we adopted this particular one from January 15, and by January 19, we achieved this particular one 100%. During COVID-19, RBI allowed some sort of relaxations. It was like during this period, it was 80 and 90, and again we did it 100. So right now it is again, it should be, your LCR should be greater than or equal to 100%. But during this particular period, we provide some sort of relaxations to the bank. And the rest one आपका 2015 onwards we start implementing this. Initially 60%, 70, 80, 90, and 2019 we achieved the 100%. And all banks, they generally maintain it at 100%. So this is something which, like, if any contingency happen with our banks, so we have that much of money, so we can pay off our liabilities for next 30 days, right? So this is something like, let's say our liability, if we calculate our today's liability is, let's say 100 crore rupees within 1 month. So that in next 30 days, we have bills payable or whatever the liability payables are 100 crore rupees. That means what we are saying with this particular one, कि a bank should maintain at least 100 crore rupees in liquid asset. So if anything happened in the market, so if let's assume कि all these 100 crore people are 100 crore amounts is coming for the withdrawal, so you can provide them money, because LCR, this liquidity risk na, it also like if any bank face the liquidity problems or crisis, it going to lead so many other risks also, reputation and all. So that is something linked with this particular. That's why this is very important. So it making sure ki, like, we have 30 days money at a time ready, so whenever we require, and 30 days period, it is assumed that within that particular period, so we can come up with some sort of solution. So that is the primary agenda of your LCR. When it comes to the NSFR, it is aapka about the sources or the allocations. So stress scenario specified by the BCBS entail a combination of idiosyncratic, bank specific or market wide shock that would be like runoff of the positions, proportion of the retail deposits. If something happened bad, so people, they start withdrawing money and all. So that can be an issue. Partial loss of unsecured wholesale funding capacity, partial loss of secured short-term financing with certain collaterals and counter policies, additional contractual outflows that would arise from the downgrade in the bank public credit ratings, increase in this. So these are the scenarios basically. Okay? So these are the major core scenarios where basically which due to these particular scenarios, a bank can face some sort of stressful situation, and to deal with that particular one, we have this LCR things. High quality liquid assets means what? So that is defined here. Please go through this one, so you'll get an idea. Basically, which are readily available to convert into cash. Okay? Banks with January 15, they have to maintain these 2015 are permitted to avail liquidity facility. This is Sir is again very important one. Please do remember this one. So bank with 1st January 2015 are permitted to avail liquidity facility against such securities under special facility called facility to avail liquidity for liquidity coverage ratio. ठीक है ना? Let's say if there is any bank who is missing their targets of 100% as of now, ठीक है, so they can avail आपका liquidity facility under this one. So where they can take a kind of a loan through their, or where we can manage that particular one through the SLR and all. ठीक है? Essential features: eligibility, availing the liquidity limits such as securities would be permitted to bank only under the condition of stress or as described under the previous paragraph. The above mentioned circular data this high quality liquid asset including the securities permitted under MSF marginal standing facility. Bank will be required to furnish declaration to this effect that they are exhausted they are all high quality liquid asset availing for this. We rarely seen any experience in our banking system when a bank who went for the loan for to maintain their LCR. Okay? It never happened in my experience, whatever I have gone through. Okay? But still, if you want, let's say the target is 100 crore rupees, if you won't be able to meet those particular one, so you do have this option. Okay? Tenure is 90 days. Liquidity, it is a maximum period of 90 days. Liquidity against securities under falser will be available after applying haircut as a stipulated for the MSF. Facility rate आपका rate of interest of the funds availed under the facility will be 200 basis point above the prevailing LAF repo rate. So that is like, let's say your repo rate is 6%, that means the loan under this particular facility will be आपका 8%. ठीक है? So that is the one. So please go through this one also. Risk monitoring आपका, ठीक है, concentration mismatch, concentration of fundings, available unencumbered asset, LCR with significant currency, market related monitoring tools, Basel III liquidity returns. Contractual mismatch आपका, let's say we take a asset for we have taken one liability for 1 year and we created asset for 5 years. Concentration, we have discussed this. Available unencumbered assets आपका, this we generally use through the LCR. LCR by significant currencies in different we have to maintain those particular one. Market related monitoring tools and Basel III liquidity returns which you have to submit as per the RBI guidelines. These are the statements. Okay? So Basel III liquidity returns आपका, statement on liquidity coverage ratio which is known as BLR1. This is again very important one. So Basel III liquidity returns आपका, name of the Basel III liquidity return, frequency and time period which required to be reported. So LCR1 basically statement on liquidity coverage ratio, BLR1 monthly within 15 days. That means for June months you have to submit before 15th of July. So this is the time period with which required to be reported. Okay? So this is your they have to report on monthly basis. Okay? So we have to report our LCR position on monthly basis to RBI, and your reporting maximum deadline is 15th of next month. Statement of funding concentration, BLR2 monthly within 15 days. Concentration part. Then the statement of available unencumbered asset, BLR3 quarterly within a month. LCR by significant currency monthly within a month, and statement of other information on liquidity monthly within 15 days. So mostly आपका monthly only statement, आपका statement 3 available unencumbered asset आपका, which we have to report on monthly basis, quarterly basis, and the deadline is 1 month in that particular case. Achha, you got this particular one now? I hope you guys are getting these particular thing. Correct hai? Chalo, okay. So this is it. So this is a quick summary for your module B. Hope you guys are getting these particular thing. I'll share this particular PDF. I'll just upload this particular PDF just after the session, and please do watch these things. I'm trying my best to help you out. I don't know, like I believe ki if you work on concept things and all, so that is definitely going to help you. This is examination like exams like CAIIB without concept. If you want to cover in single attempts, it is very tough until you are very lucky or you are very like you have enough time to prepare for the things and all. Still, my always recommendation is whenever whoever will come for any kind of suggestions regarding the CAIIB, even now it is for JAIIB also. So I always recommend you go over the concept things first. if you know the concept, then only you will be able to recall. Okay? So this is not like we have gone through the questions and around surrounding those particular questions we got something lucky and we answer those one. This is not the area nowadays. Okay? Raghuram, sir, I have already uploaded, sir, till module A. We have done for module A both the session. I have uploaded that I have uploaded day before yesterday with the session itself. So just after this session, I'll upload this particular one itself. I hope you guys are not facing any issue with that application. If you are facing any issue, I can share in the Telegram also, because it's a single file. It won't like I'll not having any issue with this particular one. In multiple files, while when we have to upload the unit wise things, and also it got a bit tough for me also, and people, they are having similar sort of requests every times. So that is done, and I have already uploaded the your mock test analysis. Somebody told me in the morning itself that they won't be able to see the analysis part and all. So I have uploaded that particular one on application itself. So you can go through and you can check that particular one. And tomorrow we will be discussing module C, then module D after day after tomorrow, and day after tomorrow onwards we are going to have regular sessions for the case studies and your application based question also. Okay? That Tina ma'am, this is a complete file. Okay? This is a complete file. Okay? So that's why I missed this particular one. Okay? See, if you'll come to the beginning now, so this is a complete file. One file that will help you. Okay? So yesterday we discussed these many areas, and today, so in one file you'll get everything. Okay? And next time I'll try ki I'll actually I'm working on some notes aapka, theek hai? So like module wise notes I'm making. So if you want to take printout, so you can, like, you'll have less number of pages and all, so you can go for that particular one also. So for JIIB I have already started making those particular one, but for CIIB I'll be able to make after this particular session itself, because like right now we have so many things in our hand, right? Chalo. So yes, everyone guys, now I'll see you tomorrow at 10 p.m. and we will be discussing our module C. Hope you guys are getting something from these particular session. So please do share your feedback also, and if you have any sort of suggestions and all, please do share those particular one also. Okay? And yes, then this is it. Bye bye.